Look, welcome to Succession Retirement Planning, What to Do with Your Premises. My name's Will Ellis. I'm one of the directors here at BW Healthcare Surveyors, and I'll be going through the presentation with you. It's likely to take probably somewhere between 35 and 40 minutes or so. There'll then be a Q&A, a question and answer session at the end, where Jenna Clark from Monaghan's Accountants will be joining us, and also Gemma Pouncey from VWV Solicitors. So we'll all be here to answer any questions or queries that might have arisen following the presentation. And we'll also all be here after that via email and telephone if you've got any questions or queries about it. Okie dokie, right, okay. So there's going to be around 8 or 9 slides. So we'll talk about what your options are when it comes to what to do with your premises. Talk about looking and finding new partners, which it seems like every practice in the UK is doing at the moment, trying to find new partners to replace exiting and retiring partners. We'll look at an option, sale and leaseback. So we'll talk about the pros and the cons of a sale and leaseback and what that process would look like. Also, alternatively, looking at putting a lease in place between the outgoing partners in the existing partnership. We'll then look at potentially merging with another practice, what your options are around that. Transferring the NHS contracts to another entity, so rather than the premises itself, but the actual contract, so transferring the contract, the GMS contract, to another third party. And then selling the surgery as alternative use, which is obviously a last resort. It's not what any of us want to see happening, but that is an option for you if you have explored everything else and you have no other options available. And then we'll look at a little slide about how to maximise the value of the premises, perhaps in anticipation of selling the surgery further down the line, and then just what to do next. Okay, so in terms of what to do with your premises, there are several options when deciding what to do with your premises upon retirement. So those include looking for new partners, which again, like I've said, is what everybody's looking to do at the moment, trying to find incoming GP partners. But we'll talk about what the alternatives are, perhaps nurses, pharmacists, etc., becoming partners instead. Then you've got an option of sale and leaseback. So sale and leaseback, for those of you who aren't aware, is where you would sell the surgery, the GP partners, the partnership would sell the surgery to an incoming investor who would then put a lease in place, and the partnership would become tenants. So you as a practice are still going to hold the contract, still going to provide medical services. It's just the surgery will no longer be owner occupied. You'll have an incoming investor who will own the premises. And then alternatively, putting a lease in place, as I briefly explained earlier. This is if you have a partner retiring but wanting to retain the asset, then you could contemplate putting a lease in place where they would become the landlords and the retiring partner would lease to the existing partnership. So that is a viable option to take as well. And then merging with another local practice, so perhaps a larger practice that you could merge with, who could take over your practice, or a practice with a younger GPs and a younger GP partnership who could look at taking over the surgery as and when you retire. So merging is certainly an option. And then you've got transferring the contract to another entity, which often runs alongside the previous options. So perhaps if you're wanting to put a lease in place, but there's no partners left to become tenants and hold the contract, you could look at finding an alternative provider like a PCN or a GP federation or just a third party organisation who could come in, take over the surgery and become leaseholders when you retire. And then, like I said, closing the surgery or selling the premises as alternative use, not really something we want to think about, and it certainly is a last resort. So your first option, finding new partners. So obviously, like I said, every practice has been looking for GP partners over the last few years, it seems. But there are alternative options to just GPs who can become and join the partnership. So you've got non-clinical managing partners, which are very popular at the moment. So practice managers becoming partners of the practice, nurses becoming partners of the practice, or even pharmacists becoming partners of the practice. So you're not restricted to just GPs. You can look at alternative staff members who could take on that partnership to resolve perhaps any issues you have with recruitment and succession planning to keep the surgery open. There are also other flexible ways of buying in. So one of the big issues about finding partners in general is the cost of buying in to primary care at the moment. The cost of the partnership, even sometimes a small percentage share, a 10-15% share, can cost hundreds of thousands of pounds. So practices have found innovative ways to kind of get around that. So you could look at gradual increase to full equity. So, for example, if you have 4 partners and one's leaving, you're going to have to find an incoming partner who's willing to spend and purchase or buy in at 25% of the partnership. Now, rather than them buying in full and paying for that full 25%, you could look at them perhaps just taking a 5% equity share every 5 years until they reach that maximum of 25%. So they don't necessarily have to buy in all in one go. You can split that increase over a number of years to make it more affordable for any incoming partners. And you could even consider reducing the buy-in cost. So there's no, you're not obligated to sell or allow a partner to buy in at the market value. It is entirely up to you. And some practices do decide to reduce that. So rather than paying 100% of the buy-in, they'll perhaps pay 80% of the buy-in, with the 20% seen as a golden hello for joining the partnership. So there are other ways around finding partners who perhaps can't afford or can't find the funds to buy in total. Okay, so that's exploring finding a new partner and some other options that you may not have thought of. If you've explored all that and you're wanting to, perhaps your practice is wanting to sell the surgery and lease it back, wanting to release the equity in the premises, so finding an investor who will always want to purchase the practice and become your landlords, there are several benefits to this as an option. There's certainly a lot of reasons why practices go through this sale and leaseback process. One of them being the lease rent will be fully reimbursed by the NHS. So any rent you pay the landlord when you go through a sale and leaseback transaction is going to get fully reimbursed by the NHS. And that should be for the duration of your lease. So even if you have a 15-year lease, when the rent reviews occur every 3 years, yes, the landlord might instigate a rent review. Yes, they might propose an increase in rent of, let's say, 5%. But that's only on the proviso that the NHS are willing to reimburse you up to that level. So if for whatever reason the NHS can't reimburse you up to the 5% increase and perhaps only want to increase your reimbursement up to 3%, then that's the maximum you will pay the landlord. You'll never pay more. Now, that is only on the assumption that you have protection in the lease and clauses in the lease to protect you against the rent going above what you are paying the landlord, which is why it's so important to get representation when you go through these processes, when you go through a sale and leaseback, or when you put a lease in place in general, just ensuring you get representation from specialist solicitors and specialist surveyors to assist you through the process and make sure all these protections are inserted into the lease. Number 2, so it can reduce the perceived risk and responsibility of property ownership. So at the moment, as owner-occupiers, you're responsible for all the repairs and maintenance of the premises, the internal and the external. Now, when you go through a sale and leaseback, there is a possibility that the landlord would take on some of those responsibilities. So perhaps traditionally, the landlord would be responsible for the external repair and maintenance of the premises, and you as tenants would only have the responsibility of the internal repair and maintenance of the premises. However, what tends to happen with primary care and what the majority of the investors prefer when they go through a sale and leaseback is for the tenant to be responsible for everything. So what we call an FRI lease, a full repair and insurance lease. So the tenant, if you go through a sale and leaseback, there is a good chance you're still going to be responsible for everything. But if that is the case, then you can actually retain a proportion of the rent that you pay the landlord. So rather than paying them in full, you can retain somewhere between 5 and 7.5% of the rent to fund those external repairs and maintenance that should be the landlord's responsibility. And the idea is you retain that rent from the NHS. So the NHS pay you the reimbursement. You retain somewhere between 5 and 7.5%. You put that into a sinking fund, and that money is used to fund any external repairs and maintenance of the premises. Number 3, so a sale and leaseback will remove the burden of ongoing capital investment. So it won't be your premises anymore. You won't own the premises. So therefore, improvements, upgrades, extensions will be the responsibility of the landlord rather than yours as tenants. Number 4, so it can help attract new GP partners. So being leasehold premises just tend to be a little bit more attractive when it comes to incoming partners, mainly, again, as I've mentioned, because they're not having to find those hundreds of thousands of pounds to buy into the partnership. They're just having to become signatories on the lease, which is seen as a little bit more attractive than owner-occupied, having to find the funds funds to buy in. It's not a magic wand. You know, there aren't thousands of GP partners just waiting for you to become leasehold premises. It's just seen as a little bit more attractive. There are still liabilities, so GP partners are still going to have to be signatories on the lease and still going to have liabilities for the duration of the lease. So, like I said, it's not a magic wand, but it is certainly seen as more attractive when you're in leasehold rather than owner-occupied premises. Number 5, so having a lease in place will generally create a higher premium value of the property rather than owner occupied. So if you've ever had a partnership change or a market valuation, I should say, for partnership changes, if you went through a sale and leaseback, the value of your premises is going to be a little bit more because you'll have an assigned lease against the property. So any incoming investors, not just buying the premises, they're buying that long-term lease that's assigned to the premises, that guaranteed rental income effectively. So a little bit of a premium is added onto that. And then with that in mind, the length of the lease is going to determine the value of the premises as well. So it's not the only factor, but it's certainly one of the factors that's going to determine the value of the premises. So the longer the lease, the higher the value of the premises. So the longer you can agree to sign up to, the more you're going to maximize the value of your premises. So that's certainly worth considering as well. So number 6, sale and leaseback can assist with improvement works, extensions, or even new developments of your GP premises. So I would say this is a big reason why practices come to us wanting to do a sale and leaseback, because perhaps their surgery is in need of an upgrade, improvements, maybe it's running out of space and they need extensions, or even they've explored the possibility of new developments, but it's always hit a bit of a brick wall. Getting an external investor in can resolve some of those issues, because you go through a sale and leaseback and you can put clauses into that agreement that the landlord, the investor, will have to spend X amount of money to bring the surgery up to higher standards, to modernize the surgery, to improve the surgery, even extend the surgery, or even look at and assist you through the process of a new development. So when it comes to extensions, you could perhaps contemplate having plans drawn up, getting the necessary approvals and the planning permission for an extension, so then you can present that to an investor, and they would look at funding that extension as part of a sale and leaseback agreement. Okay, number 7. So in most cases, the tenant will have protected rights for a new lease upon expiry of the existing lease. So there should be protections within the lease that effectively means at the expiry of the initial term, so let's say it's a 15-year lease, at the expiry of that 15-year lease, the landlord will find it very difficult to just kick you out and get another tenant in. You'll have an automatic right to renew the lease under the identical terms. Now, there are certain scenarios where the landlord can still do that, but it's just made a little bit harder, a little bit more difficult for the landlord to just simply kick you out without reason. Okay, so they're kind of the upsides of sale and leaseback. Some of the downsides of sale and leaseback, or certainly some of the things you're going to need to consider before you go through a sale and leaseback process. So leases can restrict what tenants do to the surgery. So again, because it's not your premises, you're going to have to ask the landlord's permission if you did want to do any improvement works or changes or extensions. You're going to have to get approval from the landlord to undertake those works. It can also place specific obligations on the practice. So there may be clauses within the lease that perhaps ask you to redecorate the surgery at regular intervals, perhaps every 3 or 5 years. There'll more than likely be a clause in the lease that asks you to keep this surgery in its current state of repair. So whatever the state of repair is on day 1 of the lease has to be the state of repair at the end of the lease. Otherwise, there can be financial penalties and things, or you'll certainly be required to bring the surgery back up to its initial and original state. There will also be liabilities under the lease, including rental payments. So if you're signing up to a 15-year lease, you are going to be liable as individuals. If the individual partners, or the individual signatories on the lease, will be liable for the rental payments and any other clauses within the lease for the duration of the lease. So it's just making sure, yes, there are benefits to signing up to a long-term lease financially because you're maximizing the value of the premises, but the downside is you're committing yourself to the surgery for that period of time. So if you're signing a 15-year lease, it's just having a conversation between yourselves. You'll know better than anybody else the likelihood of the surgery still being there and still operating and still providing medical services for that 15-year period. If there's a chance that it's not going to be the case, then you might want to consider perhaps agreeing to a shorter term lease, or maybe even putting break clauses within the lease, which will allow you to break the lease at regular intervals. But again, break clauses will have a detrimental effect on the value of the premises. So it's weighing up the liabilities against the value and things, and having a conversation internally to see what option is best for all partners involved. Number 4, so one of the other downsides is early redemption penalties. So these are the penalties that your mortgage provider will charge you for paying off the mortgage early. Effectively, when you sell the surgery, you'll have to pay off the mortgage. Mortgage providers don't tend to like that because they're losing out on the interest payments for the remaining term of the mortgage. So they will charge you a penalty for doing so. So it's just making sure that you speak to your mortgage provider, speak to the bank, whoever it is that provides your mortgage, and just get the figure for what those early redemption penalties are. They can sometimes be astronomical, so it is certainly worth a phone call to find out what they are. Number 5, so you must have at least 2 signatories on the lease at all times. So if you're in a single-handed practice, the chances are you're going to have to find somebody else to join before you can go through a sale and leaseback process. Now, there are some investors who would take on an investment with just a single signatory, so just one partner on the lease, but it is very, very uncommon, and the majority of them will require at least 2 signatories. So if you're single-handed practice, it's worth exploring finding another partner, or perhaps an alternative provider, an alternative contract holder that may be able to come in, take over the surgery and be signatories on the lease. But we'll talk about that a little bit later on. Now, if you've got 5 GP partners or more, then it's not really going to affect you in the short term. Straight away, you'll have 5 signatories on the lease, which is great. That's going to be a big plus point for the majority of investors. And what that means as well is the first 3 partners could technically leave and exit the lease without having to find anybody to replace them on the lease. When it gets down to that last 2, so when the second to last partner decides to leave, they're going to have to find somebody to replace them on the lease. Otherwise, they're going to remain liable for the terms of the lease until it expires. So that's worth considering as well. What some practices decide to do when they're in multi-partner practices is amend the partnership agreement. So every partner has to find somebody to replace them on the lease, just to make it even and fair for every partner in that partnership agreement. But that isn't a necessity from an investor point of view. That just might be an option that you want to take internally. Number 6, so there are also tax implications to selling the surgery and putting a lease in place. So again, you just need to get specialist accountancy advice from somebody, ideally a specialist in primary care. Obviously, Jenna Clark is on the call today from Monaghan's. She'd be more than happy to assist you with that process. But there are other specialist accountants available. Okay, so in terms of the process, if you wanted to go through a sale and leaseback and wanted to understand what the process would look like, just very briefly, it'd be a case of getting a specialist surveyor to come out and value the premises, give you an idea of what the surgery is worth on the open market, then agreeing the heads of terms, so the main terms for a new lease, what that would look like, getting that lease approved by the NHS, which is a vital stage of the process, and then going to market in negotiating with any interested party. Effectively, surveyors and solicitors and accountants can assist you through that whole process to make it as easy as possible. Okay, an alternative option is perhaps putting a lease in place. So if you have retiring partners, but they want to retain their asset, or they can't find somebody to replace them in the short term, then rather than going through a sale and leaseback, you can just put a lease in place yourselves. So the retiring partners would become landlords, and the remaining partners would be the tenants. So you don't necessarily, and under that circumstance, have to put a lease in place. It is an option for you. You could potentially just amend your partnership agreement, and again, it's worthwhile getting advice from a specialist solicitor to talk about those options and which is best. But on the assumption we're going to be putting a lease in place, it's worth just talking about the few health warnings for both tenants and landlords to consider before that lease is signed and agreed. So the first thing and the most important thing is to ensure that a specific NHS GP surgery lease is used. We see it far too many times where a GP or a partnership has just decided to get a standard template off the internet and just had it all agreed and get it all signed. And it just causes so many issues down the line, because unlike the standard commercial leases where you've just got two entities, the landlord and the tenant. In primary care, it's very different because you've got the NHS involved as well. The NHS have to be involved in every stage. So without their approval and without specific clauses to explain how the rent review mechanism and the rent review reimbursement will work and things, it's just going to cause issues and disputes further down the line. So I cannot stress enough how important it is to ensure you get a specialist NHS GP surgery lease. And when you go through the lease, so when you will once all the lease has been agreed, it will require approval from the district valuer and the NHS. So a district valuer will have to undertake a value for money report, and then that will be approved and agreed by the NHS. If for whatever reason they don't approve it, then you're going to have to go back to the drawing board and renegotiate terms and seek approval again. And again, that representation can assist you through that process. Okay, so number 3, the lease should be on arm's length terms. So this effectively is, as tempting as it might be to agree favourable terms when a GP retires because you're friends with them perhaps, or they're ex-colleagues, etc. It can be very tempting to give favourable terms and perhaps allow the tenants to exit the lease every 12 months, give break clauses in there. The downside and the issue of doing that is it makes it very difficult to market the surgery for investment purposes further down the line. So it's just ensuring again that you get the correct representation to protect both interests of the landlord and tenant, but also look at potential future value of the premises as well, because there's going to be next to zero investors interested in purchasing a primary care lease that perhaps has 12-month break clauses. So it's just ensuring you get correct representation and advice with regards to the lease terms. It's also important to clearly state the landlord and tenant's responsibilities. So things like the repair and maintenance obligations, clearly stating who's going to be responsible for what. And the clearer you can make that, the fewer disputes and issues you're going to have further down the line. So it's important to spend time sorting out who's responsible, who's going to be responsible for what. Number 5, it's also worth checking conditions of your mortgage. So there may be restrictions within the mortgage that doesn't allow you to become a leasehold premises. There may be an obligation that you have to remain as an owner-occupied surgery. So again, it's just worth speaking to the mortgage provider and finding out and ensuring there are no restrictions and conditions in the mortgage to prevent you from putting a lease in place. And again, potential tax implications, as there always is with transactions like this. Even with putting a lease in place, there are potential tax implications. So please do get advice from a specialist accountant when it comes to putting a lease in place. Okay, so merging with another practice. So in simple terms, as I'm sure you're all aware, merging with practices are very, very common these days. There seem to be merged practices popping up on a daily basis up and down the country. But it's when 2 or more practices join together to form a single practice. So from a retirement and succession planning point of view, it's the ideal scenario would be to perhaps find a larger practice who can be more of an acquisition, but then a merger, but it's still technically a merger. A larger practice comes in, takes over your smaller practice and absorbs obviously the GP partnership. So then when your GP partners are retiring, you've got potential younger GP partners from the new practice coming in to take over and keep the surgery going. There's also benefits from a redevelopment. So a lot of practices merge and then perhaps redevelop new sites and merge the 2 premises and 2 buildings together. So you can explore possibilities of that. You can also explore different ownership types of the premises. So you could set up property companies where the new merged practice would own both premises and lease it back to the partnership. It could also just be owned individually still. So you could merge with a practice. The retiring partners could still own that specific practice and then lease it to the new partnership. So a lot of options there for you when it comes to merging with another practice. And then transferring the contract to another entity. So this is a great option for failing and struggling surgeries or those who might be facing closure due to retirement of their GPs. So you could potentially look at options such as a PCN or GP federation coming in and taking over the contract, becoming contract holders. And if you are putting a lease in place, these organisations can be leaseholders as well. Again, a local practice via a practice merger that we've just discussed. Third-party organisations as well, which is a big thing at the moment. There seem to be third-party organisations popping up all the time, who basically specialise in taking over practices for retiring GPs, practices who don't want to run their surgery anymore. Even in leasehold premises, taking over leases and contracts as well. So it's more and more common, these third-party organisations taking over surgery. So companies like Operos, who you may have heard of before, or Harley Street, for example. You've also got employee-owned trust, which is a slightly different model to perhaps the GP partnership model. It would be where any staff member effectively could own shares in the trust, and it would be the trust itself, the employees as a whole, who would hold that contract. And also you've got the NHS Foundation Trust as well. So in Somerset specifically, you've got Symphony Healthcare Services, I believe, who obviously will offer that service. That's probably a very good place to start. You're very fortunate to have an organisation in Somerset. There's not many of those up and down the country. So the NHS Foundation Trust could potentially take over the contract for failing and struggling practices. Okay, and the last one is selling the surgery as alternative use. Obviously, the closure of a practice should be viewed as a last resort. It's not something that any of us want to see happening. You should explore alternative options, a lot of which that we've just discussed now, but the ICB and your NHS body should be able to talk you through all those options to potentially avoid the drawbacks of the value of the premises. For example, as alternative use investment will sometimes be significantly different to the value as a surgery. So it's what people don't often consider is your surgery is going to be worth X amount as a GP practice as its existing use. But when you start to think about converting it to residential or commercial, retail, etc., then it can take a massive hit on the value of the premises. It is often very, very different. It's not always less. It can sometimes be more, but it's often different when it comes to the value as a GP surgery and the value as its alternative use. So that's worth considering as well. You might be losing out financially unless you keep the surgery as a GP practice. And obviously, everybody wants to avoid the additional stress and the worry surrounding patients, practice staff, finances, potential personal debt, and handing back the contract. Like I said, not what anybody wants to see. So hopefully we've provided a few options here as alternatives to closing the surgery down. Okay, so how to maximize the value of the premises. So something slightly different, but in anticipation of potentially selling the surgery, there are things you can do, steps you can take to look at maximizing the value of the premises. One of the first things to do is check your notional rent to make sure your notional rent is correct and in line with the current market. You should really be doing this every 3 years, get an independent surveyor to look at it and just make sure the proposals from the NHS are in line with the current market. But it's certainly very, very important prior to a sale to look at maximising the value of the notional rent. Look at any leases that you have in your premises. So if you rent any space out to pharmacies, dentists, whatever it may be, just ensuring those leases haven't expired and making sure there aren't any outgoing or outstanding rent reviews, making sure that rental income is maximised for those leaseholders as well. And if you do have any spare space, which I appreciate nobody seems to have at the moment, but if you manage to magic some spare space from somewhere, then you could look at bringing one of these alternative therapists in and leasing out the surgery. Or if it's space that isn't currently reimbursed for notional rent, you could look at contacting the NHS and seeking approval for that reimbursement. And then you've got upgrades and improvements to the surgery and potential extensions as well. So any improvements you make to the surgery or extensions, as long as you get approval from the NHS for reimbursement, it's going to increase the notional rent for the practice as well. And effectively, all these things are going to increase the rental income. And if you can increase the rental income of the premises by even just £1,000 a year, it can increase the value of the premises by perhaps 10, 15, even £20,000. So even small increases in reimbursement can significantly increase the value of the premises. Okay, and that's just about it really. So we'll have a bit of a question and answer session, but it is just really important and imperative that you receive advice from specialist surveyors, accountants and solicitors. So for all the options that we've talked about, for everything that we've gone through today, before you make a decision, just pick up the phone, speak to myself, BW Healthcare Surveyors, or other specialist surveyors, speak to Gemma at VWV or Jenna over at Monaghan's, the accountants. So just get as much advice as you can before you go through the process. But yeah, if anybody's got any questions or queries, we've got Jenna and Gemma there. I don't know if either of you wanted to add anything that I perhaps haven't mentioned.
I think I'd just reiterate the please get specialist advice point, and also with most of these transactions, certainly from my perspective, it's always really helpful if we can have open conversations between the practice, the accountants, the surveyors and the solicitors all together from quite an early stage, because that relationship can be really beneficial throughout the transaction to make sure that everything goes as smoothly as everyone wants, to make sure that things reflect what you think it's supposed to as well, because there are, particularly in respect of leases, there are quite a lot of misconceptions about what a lease means. And so having that advice as a team, I suppose, from early doors is really beneficial, I think.
Absolutely, yeah, no, I absolutely agree with that.
Yeah, and more of the same from me, really. You know, when we get to know our clients, then that means we really understand what their priorities are, what's important to them. And there are times when, particularly, you know, networks are the best example of how this has happened recently, and people have misunderstood how income might be shared or various things. So actually making sure that everybody's on the same page from the start is really important. And it's a big transaction when you're talking about selling a property, or you know, whether that's to lease or otherwise. It's a really big thing to be happening. So making sure that there are just some open and honest conversations from the outset can be really helpful. But yeah, any specific questions, then please fire them at us.
Perfect. Thank you both. I hope everybody has a great afternoon and a great rest of the week, and we'll hopefully speak to you all very soon.
Thanks, guys.
Thank you.
Bye.
Take care.